Hello, today is March the 7th, 2015. I'm Jeff Tennant. As usual, let's start out by reviewing my last call. I had a mejt target of 2096.81, and I said if we did not gap up, I thought we'd get much more than that, which worked. We actually also hit the failed target of 2083.20 from February 12th. We have just a few more failed targets to be hit, and the question is when that will happen. I also said it would be quite interesting to see if we could undercut this low, which we did, because undercutting this low here would complete the breakdown of the top as long as it's a valid break and we get confirmation. We'll discuss that in just a minute. During the day, mejt said ultimately lower prices would print. Here's the target. It said ultimately higher prices would print, and gives us a target of 2095, which is quite above, quite a large amount above where we closed. During the afternoon, it gave an ultimate sell signal and the sell signal. They did work, but when it gave the signals, it also said prices would trade over the price indicated by this thick blue line. And even though the market was declining all day, we did trade over that line, and mejt said the move was a false move when it printed. So that was helpful. Well, are we going to hit this 2095 target, or are we going to circle the drain? Let's look at some other things. This is the NASDAQ McClellan oscillator. When it goes way under the lower band like this, the lower Bollinger Band, it's usually a sign that we're at a low. All we have to do is reverse, which hasn't happened yet. What are the chances we're going to reverse? Well, I do have a few lower targets. One target was that we would hit this trend line, this blue trend line. That was done. I have a few failed mejt targets from last month. This one was already hit. Hitting two targets the same day is often more than the market can swallow. Usually there's a bounce. Ultimately, I want to see this 1972.56 price be undercut, but just because I want to see it undercut doesn't mean we have to travel there in a straight line. This is a 30-minute chart. Here's your inverted cup. Here's your handle. This is not the type of formation which tends to stick. If this is the handle here, it has to be within the lower 30% of the cup to be a valid retracement. That isn't. If this is a cup without a handle, the handle is sloping down with no pullback and no horizontal move. These tend to be unsustainable moves. If you look, the price here is a Fibonacci target of this prior consolidation. It's also a target of this one. Doesn't have to work, but often does. There are a number of things about the drop I don't like. First of all, it came in response to a news announcement. The announcement was from the FOMC. It implied that interest rates would be going up. The rule about moves to news announcements is that they tend to be reversed quickly and completely. I don't like the timing of the drop. Usually if we have a big drop like this and then have a consolidation, we have to wait until later on in the day for the drop to count. This could be a ending diagonal triangle, in which case that would mark the end of the move. That price is also a Fibonacci retracement of the entire advance from early last month. Here's a 38.2% retracement. Typically, when you have an ultimate buy and an ultimate sell in the same pattern, what usually happens is the market consolidates and goes nowhere the rest of the morning, and you have to wait for later in the day for the move to happen. There's nothing in the system that precludes a move earlier, but it's not the common occurrence, and we still have this higher ultimate target. Remember, since the summer of 2002, we've had nearly 2,000 of these ultimate signals, and all but a handful have printed. All but 3 have printed. So we have an overlapping, unsustainable drop right to a support level. There's also, I should say, additional support from the TDST lines. Here's some TDST lines on the 65-minute chart. There's support at and just under the line. So we have support from that, from the Fibonacci pattern, Fibonacci retracement, from the overlapping decline, which isn't what should be happening if we're going to have a sustainable move. So if I'm reading this correctly, this low should hold. We should move up, most likely right from the open, and have a target of 2095, which doesn't have to print Monday, but in the majority of cases we don't have to wait very long. And that's today's call.